Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for November the 17th, 2010. Now our positions for tonight are going to both be in the foreign exchange market. Now our first trade is going to be in the US-Japan currency pair. Now we've been trading this one now for about a week and a half. We've had a couple of very good moves. Our triple EMA cross has gone off. We can see that I have this trend line drawn here off this 80.50 level. We've been buying near that level, around 80.70, 81 level. Our predicted MACD and our predicted true strength indicator, everything pointing higher. Our predicted medium and long-term differences are approaching the 1 level or the 100 level, so they're getting a little bit overbought. So we've closed today at 83.29. Our key levels are 82.99, 82.40, and 81.98. 81.98 being of course our major level of support. Now we want to get into buy positions here, but we would like to see a little bit of a pullback. Now this triple EMA cross is still very fresh, and it's been a very long time since we've had one. It's been September 22nd was the last time. Well, actually about realistically about the early part of September was the last time this triple EMA cross went off, and it was strictly related to intervention. There's been no intervention this time. The US dollar is strengthening on its own. The yen is weakening across the board, so everything looks good here. Now this is a play here. 82.99 obviously is a point of interest to me. Between 82.99 and 82.40 is going to be my focus for the entry point. So let's go into the daily report here from Vantage Point now and see if we can fine tune this entry point a bit, because I think the pullbacks are going to be relatively shallow on this pair, respecting the volatility in the market, the weakness in the yen, and all of that. Now looking at the daily report here, we've closed it at the 83.29 level. For tomorrow, the dip is, as I suspected, is going to be very shallow. We have 82.85 with a high of 83.58. I think we're going to exceed that high of 83.58. 82.85 is very likely to hold, so the 82.90 area, that's where I would be looking for getting into the fresh long positions. Stops, now the interesting thing with stops is we want our stops below this 81.98 level. That's a key level of support here. Only a sustained break of this level will see the market reverse. Now again, our indicators here, we can see this little bit of a crossover, the medium term crossing over the long term predicted difference. Not a big concern for me just yet, because we can see that we're well below the zero line on the predicted MACD, and our predicted true strength indicator from Vantage Point is just approaching the zero line also. So from in that regard, we are not overbought in the least. So everything looks good there. Further moves, aggressive traders 82.99 can get in, less aggressive traders 82.85, all stops below the 81.98 level. Now our second position for tonight is also going to be in the foreign exchange market. I want to point out there's a high correlation between these two trades. They're both based around further US dollar weakness. Now, or US dollar strength, excuse me. So just to clarify, I'm so used to saying US dollar weakness, you'll have to excuse me there. So we're actually seeing some dollar strength. Now looking at this, we have the potential here for a bit of a move down back towards this 74.75 level. Now with this one, we're going to take a little closer look, because the picture is certainly not as clear as what it is with US Japan. Now looking at this, we're going to go through our different crossovers. Our short-term crossover we can see took place about 5 or 6 days ago. It was a warning sign that this was going to move lower, and this is a rare time when the short-term actually held to the downside and it didn't cross back over. Now looking at this, we can see our medium-term crossover has confirmed that about 3-4 days ago. Everything looks good there. Now our long-term crossover from Vantage Point, this is where things get a little trickier. Now you can see that this long-term crossover from Vantage Point has not crossed over to the downside. Now this is a commodity currency, and again, those commodities can turn very quickly, but everything is pointing to a bigger move to the downside on the New Zealand US currency pair. So we've identified that, essentially our short-term crossovers to the downside, our medium-term crossover to the downside, but the long-term and the triple EMA are not. I would like to see this 3-day progress a little bit lower past that 18-day predicted moving average before I get loading up too much on short positions on these commodity-based currencies. So we've identified we want to sell this. Now let's go in and have a look at that daily report. Now looking at the daily report on here, we can see 77.13 is the high, 76.22 is the low. So there's a good opportunity for close to a 100 pip move here. So what we're going to do, we're going to patiently wait, and I don't think we're going to have to wait too long, guys, to be perfectly honest, because what we're going to do is I'm just going to very quickly review the close here. Now we can do that from the chart. 77.13 is the predicted high from Vantage Point. So we're going to take that predicted high and look at it in comparison to these predicted moving averages. We have 77.08, 77.44, and 77.02. So we can see that we have a considerable amount of resistance now because the market's closed at 76.78. So very important to point that out also, that we've closed below all three of the predicted moving averages from Vantage Point, and we're looking for a very slight retracement to get back into the shorts. So 77.08 is the area that I would look to get into the shorts, and we would like to see a move towards that, your intraday traders, probably 76.30 area. Your longer term traders, they could be targeting this area down in this support down around 74.50, 75 level, somewhere in there. Now everything else is confirming this move. Predicted medium term difference is broke well below the zero line. Predicted long term difference is crossing over that line. Predicted MACD has crossed the trigger to the downside, as is the predicted true strength indicator. So everything we have here is pointing towards this particular commodity currency moving lower against the dollar. So everything looks good there. 77.08, that's our focus for tomorrow. So those are the positions for November the 17th, 2010. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.